Hello dear traders. Despite the beginning of the Ethereum merge, Ethereum collapsed together with other tokens including Bitcoin and Cardano yesterday. The fall came after the US dollar has strengthened. Economic and geopolitical developments keep weighing on the stock, currency and crypto markets. Today the greenback is the strongest currency in the forex market. The dollar shows growth on expectations of aggressive moves from the US central bank. Thus, the US dollar index hit its 20-year low, and the greenback soared it to its 20-year high against the Japanese yen in less than no time. In fact, the dollar is now increasing not only against its main counterparts, but also against cryptocurrencies. For instance, given that Bitcoin is inversely correlated with the US dollar and has a direct correlation with the US stock market, forecasts can hardly be promising. The Federal Reserve is likely to go on with the tightening of monetary policy, even if it's harmful to the economy. While the dollar is on a winning streak, there is a high risk of global collapse in the stock and crypto markets, some analysts warn. For instance, the NASDAQ, a stock market index that includes tech stocks, has closed lower over the past week. In general, the NASDAQ is on track for its longest losing streak since November 2016. Cardano is one of the biggest losers among the leading digital assets this week. On Wednesday, it plummeted by 9% to $1,535.25 per coin. Overall, tokens worth $327 million were liquidated in the crypto market. Meanwhile, the crypto market capitalization dived below $1 trillion for the first time since July. According to TipRanks, 62% of wallets have kept Bitcoin for 1 year or more. On the other hand, 32% of wallets were found to have been kept it for a month to a year, and just 6% held it for less than 30 days. The Fear and Greed cryptocurrency index lost 8 points in a week and fell to 20 to sit in the extreme fear zone. Bitcoin suffered the biggest losses this year in August, with a rate hike by the US Federal Reserve looming. The flagship cryptocurrency risks falling deeper this autumn, with the quotes moving from the green July price corridor to the red one. An inexorable decline of Bitcoin against the dollar continues. On Wednesday, digital gold lost 0.5% and traded at around $18,879 due to the stronger US dollar. In light of a rate increase due on September 21, the digital asset has poor prospects. Notably, every year since 2017, Bitcoin has posted losses in September. However, this particular September is different from others. Let's look at the chart of the Ethereum to US dollar to find out why. Ethereum has grown by 9.3% over the past 7 days, and the number of unique addresses of the Ethereum network has increased by more than 2 million in a month. The number of coins locked on staking is also rising steadily. There is literally one step left before the Ethereum merge. The Bellatrix update was activated on Tuesday, marking the beginning of the long-awaited transition of Ethereum from proof of work to proof of stake. The terminal total difficulty (TTD) has been set to 58,750 and 18 zeros, which will represent the cumulative difficulty of all mined Ethereum blocks. Once the TTD reaches this number, the network will merge its execution layer with the new consensus layer. The merge is expected to take place around September 13-15. The Ethereum merge will be a serious challenge for Bitcoin. If staking fails, traders will rush to sell off all cryptocurrencies and Bitcoin will collapse. Otherwise, they will switch from Ether to Bitcoin. If the merge is successful, Ether may well deprive the first cryptocurrency of leadership in the market. While miners are accumulating Ether, all altcoins are still in correlation with Bitcoin. Today's crypto tips from InstaForex TV will be dedicated to savings, or rather their safety. As we know, theft is widespread in the crypto world. Protocol flaws, so-called re-entry attacks, smart contract vulnerabilities, errors in software, new projects without proper security audits, crypto scams, and fake administration. Scammers use these and other loopholes to steal money from developers and users. The DeFi sector is the main victim of hackers who easily find vulnerabilities in new startups. For example, cyber hackers stole more than $11 million from Elephant Money and about $80 million from Qubit Finance. The hack that caused Axie Infinity losses of $620 million in crypto is considered to be one of the biggest cyber attacks. Cross-chain bridges are another Achilles heel in the crypto industry. Since early 2022, hackers have attacked exchange services 13 times and have stolen a whopping $2 billion. Therefore, protection is so important. In order to minimize risks, experts recommend keeping all private information, key passwords, mnemonic phrase on carriers without access to the internet. Get a cold wallet, avoid public Wi-Fi, and choose only trusted platform to work with you. This has been our weekly crypto review. Have a nice and profitable trading day. See you next week.